Hello, and you're welcome to this Global Business channel. It's another episode of Global Business Insights where we bring the main business news stories plus perspectives by experts and seasoned senior analysts on the business headlines. Today we look forward to 2025 on what the major business trends could be and how that could affect your business. First, some of today's business news. The Nigerian Central Bank, they will have their rate setting committee. That's the Monetary Policy Committee meeting. 298th meeting begins today. It's a 2-day meeting, also the final meeting of the year. And this is where analysts are saying that rates are likely to be further hiked. The People's Bank of China today, according to the bank's official statement, has kept the medium-term lending facility rate unchanged at 2%. US inflation figures this week are expected to show stubborn price pressures, reinforcing the Federal Reserve's cautionary posture towards future interest rate cuts. The US also, the Securities and Exchange Commission has summoned Indian billionaire Gautam Adani on US bribery allegations related to an indictment against him. The head of the Adani Group and his nephew, Sagar Adani, are being sued over allegations of hundreds of millions of dollars in bribes. Still in the US, President-elect Donald Trump has announced, that was on Friday evening, that investor Scott Bessent, said to have a moderate stance on tariffs, will be his nominee for Treasury Secretary. His mission would include ushering in a new golden era for the United States, which includes addressing trade imbalances. Also, American financial services company Cantor Fitzgerald CEO Howard Lutnick will lead the tariff and trade agenda. He has been announced as the next Commerce Secretary. Meanwhile, White House's top economic advisor, Lil Brainard, and director of the National Economic Council, has warned of chaos if Trump scraps Joe Biden's manufacturing tax credits and increases tariffs as planned, adding that undoing the Inflation Reduction Act and the Chips and Science Act, seen as Biden's signature legislation, would hurt U.S. manufacturing capacity. Italian lender UniCredit said it had offered 10.09 billion euros, that's $10.57 billion, to buy rival Banco BPM in a stock deal. The sale implies an offer value of 6.67 euros per share. That's a premium of about 0.4% of BPM's last close on Friday. As we enter 2025, we are at that time in the year when we look at what to expect in the coming year. The International Monetary Fund, in its latest outlook, now forecasts global growth at 3.2% in 2024 and 2025, describing it as underwhelming. Analysts, including in The Economist, described several trends to watch out for business in 2025. In summary, I see 5 major business considerations one could ponder over. First, lower inflation will encourage more central banks, including America's Federal Reserve, to cut interest rates further, and that will prompt more consumers to go shopping. Second, IT spending will rise to $3.6 trillion as companies tap into artificial intelligence. We will see almost a third of major American firms investing $10 million or more in AI in 2025, up from 16% in 2024. Margins will be hit, however, by higher upfront technology assimilation costs that are not as easily passed to the market. Thirdly is that green policies will not be materially affected by the incoming administration. That's in the US. Policies will still drive global metals prices 7.5% higher, with demand growing for everything from car batteries to cables, and thus from copper to steel. Fossil fuel prices will continue to slide down as demand slows and supply excess expands. In an earlier post, we spoke on crude oil prices being lower in 2025. Electric vehicles will continue to be a bright spot for car makers as cost of vehicles drop and convenience is improved. Environmental goals will also stimulate infrastructure spending around the world. But there are also geopolitical wild cards, extreme weather, rare geological situations, a different pandemic, plus the lowering of Russia's threshold to launch nuclear weapons and more aggressive use of cyber warfare leveraging new technologies can all be wild cards. The world is as unprepared as ever for many of these incidents, and few lessons, they say, have been learnt from COVID as most environments have gone back to business as usual. Finally, we cannot ignore Trump 2.0 now that cabinet positions are filled, criticized as less diverse than needs to be, and which also seems to prioritize loyalty. Let's just say there are three scenarios. Scenario one is golden age scenario, while scenario two is business as usual, not for lack of effort, but more of a drag driven by congressional, legal, and other institutional pushback and weak execution, especially with absence of the competence, savvy that you need, especially in executing difficult change. While scenario three is a descent into extreme chaos. There are 5 areas to watch as we examine which of these scenarios are more likely to emerge. For example, will America emerge as the dominant energy producer, radically expanding exploration and production of fossil fuels and reducing fiscal incentives for clean fuels? Worst case here is actually less crude oil production as demand slides and investment falters due to low energy prices below break even. Second is the sharp increase of tariffs to protect U.S. industry, to fund the treasury and be a lever for negotiation. All this without risking a trade war and global inflation. Worst case is an extreme retaliation scenario as China and European allies also ramp up tariffs, and we see more isolationism and trade barriers beginning to mount. Again, this will compound inflation. Third area is if President Trump is able to end the conflict between Russia and Ukraine without capitulating to Russia and bring a durable peace between Israel and the Palestinians, leaving a legacy that may exceed that of any president since Ronald Reagan. Worst case here is a major new escalation, which is already finding fresh momentum. And then, will we see the largest deportation operation in American history without precipitating civil chaos? The best case would be deportations blended with easier paths to citizenship for qualified immigrants, while the worst case is stiff legal pushback and state-level resistance, especially in the sanctuary blue states. And then, of course, will the Department of Government Efficiency, DOGE, find and be able to implement $2 trillion of savings in government spending without strong establishment pushback? The worst case is the legal, congressional, and civil resistance that paralyzes execution. The golden age is a return to lower inflation, high U.S. economic growth, and return of capital attracted to fiscal incentives and restoration of peace in the Middle East and Europe. The probability of golden age today is under 20%. The odds of seeing a worst case of chaos is higher at 30%, while a business as usual scenario has for now higher probability at 50%. Business as usual is where intentions are halted by institutional inertia, legal and blue state pushback, and expected resistance to change from various stakeholders. Intra-party discord and battles amongst Republicans have to be watched. There are still many closet GOP never-Trumpers, noting that the federal system delegates important powers to states and cities. The probabilities will change, and Trump has 2 years to show he can improve the possibility of golden age to over 50% ahead of the midterms. at which Dems will focus on stopping Trump from taking the US down into chaos. 2025 for Africa and emerging economies will be more positive, where businesses can tune out the noise and exploit the many opportunities driven by global trade recalibration, higher investment yields, and a vast growing untapped market with huge gaps in infrastructure that are opportunities if investments can be attracted and the environment is right. Opportunities for intra-African trade and progress with the associated trade pacts like the African Continental Free Trade Area could also see some traction. For Nigeria, a narrative driven by a debilitating culture of low expectations has to change. We are entering a global area where a single artificial intelligence data center will need more electricity than today's entire epileptic grid in Nigeria can deliver. While one admits there are quick wins, we should be pushing a 10-year path to local chip production, not dwelling on, say, local refineries and airlines, and in a situation where we can't even give very basic electricity to most of our citizens. In Europe, the first refineries, remember, were running by the middle of the 19th century. It should also be obvious that we are unlikely to see an initiative from the US, G20, Europe, or even Asia, which will rescue Africa from poverty. The times call for turning the page to a different political chapter that will not give excuses to an impatient polity groaning under an array of pressures. Still in Nigeria, the Central Bank Monetary Policy Committee holds its two-day meeting today and tomorrow, the 298th meeting and final one scheduled for the year. The issue is how to tame inflation now at 33.88%, also with the monetary policy rate trailing inflation at 27.25%. A significant negative real rate disincentivizing investment. Also important is guidance on stabilization of the exchange rate and expected progress on inflation in an economy that is struggling. The latest central bank composite PMI data, 49.6, shows private sector in contraction, especially the rate-sensitive industrial sector with PMI, that's for October, at 49.3. Analysts will also see if the central bank agrees with the IMF in downgrading their latest 2024 GDP growth forecasts from 3.1% to 2.9%. The latest inflation expectations survey by the central bank projects inflation will indeed begin to come down in the next 6 months. What is less clear is how much additional tightening is going to be needed to achieve that. Analysts are unanimous in expecting a rate hike, albeit a less hawkish one, as industry hopes for an end to a painful tightening cycle. Asian stocks were mostly higher, with investors awaiting a slew of economic data. Singapore data, that's for inflation, will soon be out. That's inflation figures for October. And we will also get this week China industrial data and India's third quarter GDP numbers. Well, that's all we have on this episode of Global Business Insights. This is Bode Oshosami. Thanks for sharing on Facebook, LinkedIn, X, and YouTube. And again, thank you so very much for watching. Bye-bye.